gentlemen. Welcome to another live stream of In the Black. Today, we're going to talk about market close, what happened today in the stock market, what were the reactions, and what are some of the strategies that me and Troy did as we were trading some of these stonks, if you will. It's going to be it was a pretty interesting day. I was a little bit relieved to see that people were able to hold on. You know, they got their diamond hands, and they didn't fold. You know, a lot of people. I think the intention of some of the power players up in Wall Street was that yesterday's stunt would have scared off most of the so-called retail investors. But you know, they said as a unit, everybody stood firm. People didn't do. I think it's almost actually a galvanizing event. I think this kind of really put everybody together, letting know we're in this thing together. To kind of, you know, just to show Wall Street that, you know, just because we don't have billions of dollars individually doesn't mean that we can't move the market as a collective, right? So it's the classic 99 versus the 1%. So like I said, like we said yesterday, this is definitely a period in history that will go down in infamy or triumph, depending on what side you're looking at it as. So it's good to be part of history. It's good to be in the game. I'm in with both AMC and GME. More AMC than I am on GME because I kind of missed that rocket ship. But, you know, I feel like I'm doing my part. Whether or not, you know, I'm able to make a huge profit like some of the people have been able to do, you know, that's okay for me. For me, it was a little bit more personal. For me, it was a little bit of get back, a little bit of showing that these powerful hedge funds, they can't run the whole. They can't have their cake and eat it too. You know, they can't set the rules of the game, start losing the game, and you know, toss the checkerboard across the table. They have to take their licks just like everybody else. And I think as you know, as a country, we're tired of seeing them getting bailed out. I mean, we're tired of seeing them, you know, getting either bailed out formally by DC or informally by their buddies. You know, the stunt Robinhood did yesterday was, you know, irreprehensible. I took on to just call them Robinhood instead of Robinhood because essentially they robbed the people. Troy, I don't know if you saw Chris Como's interview with the Robinhood CEO yesterday, and pretty much Chris Como, he read him his rights. I mean, he told him, like, it sounds like either you had a liquidity issue or you were doing this to protect the special interests of major billion-dollar hedge funds. You can't have it both ways. You can't say on one hand that, you know, you don't have a liquidity issue, but you had capital requirements that you had to meet by the clearinghouse. And then on the other hand, you know, turn around and say that, you know, they were fine with cash. They weren't fine with cash. They had to borrow $1 billion, right? I would have rather, as a user of Robinhood, been told that up front, that saying, got an email and saying, hey, we're going to have to restrict trading because we're cash strapped because of the volatility of these certain stocks, right? If I had gotten that, I could at least look at that and said, okay, they gave me a reason of what they're doing. But instead, they got silent. Instead, they never say anything. Until this day, they're still denying that that's what happened. Matter of fact, it seems that reports are out that so many Robinhood people who work there, the staffers there, were so upset that, you know, the executive management team there thought they would appease them with $40 of DoorDash credit. You know, I mean, it's a joke. It's a joke. It's really disheartening. And then going into today's trading, you know, you were only allowed to purchase 110 shares of a given of any of these hot, we'll call them Reddit stocks. And once again, maybe not as big of an issue for GME, but for some of these smaller share prices for AMC, for Express and other things, or Naked, all these smaller share prices, that does a lot of damage. That prevents the price from going up. So it's still price manipulation. What do you think, Troy?
It definitely is, because at the end of the day, it's simple supply and demand. The supply is finite. We know there's a certain amount of shares out there, but the demand is altered if I can only buy a limited amount, and that's going to cause the price to go down. So I'm actually a little impressed. What has happened here? AMC is still up on the day. Looks like it's holding around $13.27. It did not crater as I imagined some people thought that it might. Taking a look at GameStop. The GameStop's the real impressive one. It's really high. It's definitely overvalued, but it's really high. But it's still held north of $300. Still finished up on the day. It's slightly down after hours. I believe that both stocks will open with a rise. Not a meteoric one. Don't know that definitively, but I think they'll open up higher on Monday, especially if some of these contracts expire, because what the news has shown is that they can't stop shorting it. They're addicted. It's like a drug to them. They're really playing a game of chicken. Here we are. They see what this has done. They see what the price has gone up. And though it's shot into the moon, they know it's going to fall at some point. Eventually it will. And they can't stop shorting it. So that squeeze is still going to exist, as there's clearly a lot of people with the good old diamond hands out there, and they're holding well. So for the price standpoint, I'm impressed. I'm happy with it. They haven't fallen apart, and I think a lot of people were talking about they're falling apart. And speaking of them falling apart, I'm disappointed in a lot of these politicians that I've heard come out and talk. Not all of them, of course, but the ones who are taking the sides of the hedge funds, the ones that are taking the side of Wall Street. There's a lot of people out there talking about protecting the retail investor and people, as if people need to be protected from themselves. And that's just crazy talk. A lot of people have made a lot of money in this. And with all stocks, there's risk. Anyone who puts money in stocks should understand that. It's so with the price of GameStop, the people that are buying $300 shares and they're getting it on this point, definitely riskier than the people who are in it earlier. But let's not act like there haven't been millions and millions of people who got into it on its rise up to this point, and they're definitely up on the investment. They're worried about people losing everything. Convenient timing when people have been losing everything in the pandemic, people have been losing everything in the market. When these hedge funds short stocks and drive down the prices of people's portfolios, and by the way, driving down the price of these companies, resulting in bankruptcy, resulting in inability to raise capital, the pressures that the stock market can put on a company in capitalistic culture, cutting benefits, reducing wages. They never seemed to care then, but now all of a sudden everybody and their mama's concerned about your average Joe. And the reality is it's just covering up for the fact that hedge funds have been absolutely washed this month, and they can't get off the drug that is shorting stock. So that's the biggest thing that to take away. And then the second part of that is the real investigations needs to be in what appears to be naked shorts, which is illegal, because once you can definitely go a little over 100%. You shouldn't be that high, but you can go over it. But 140 is crazy. So there needs to be an investigation as to how GameStop got 140% shorted. There needs to be investigations of possible collusion to force the prices of GameStop and AMC and the other so-called Reddit stocks down, because they definitely had a chilling effect on their price. The fact that they closed up knowing that there was limits to people being able to buy these shares and exercise options is impressive to me. So I'm not speaking for the long-term financials of GameStop or AMC or any of the other so-called Reddit stocks, but the idea that they closed up when they limited how many they tried to purchase. I wanted to purchase 100 more shares today, and at a nice dip that would have closed that profit for me, but Robinhood restricted them. We did get a little more news as to why some of those restrictions in their place. I will say I do feel slightly better for Robinhood, but it does not excuse them. It was a cash flow problem. They can't handle the sheer volume of trades that has run through them. As a result, they have had to limit the trades of them. So they definitely didn't limit the trades of everything else, but they limited the trades due to the volume of the so-called Reddit stocks.
And that's and that's on them though. When I say it's on them, it's on them for the failure to communicate. That is a huge issue. You should not leave your customer base in the dark, right? And especially when you see that the narrative is trending, that you're trying to somehow make it so these hedge funds catch a break and can catch up. You got to get in front of that. And I'm still not sold on the fact that they weren't trying to still let their hedge fund buddies catch up. I'm still, the jury's still out on that to me. I think there needs to be a formal investigation. I saw that the SEC said that they were going to look into brokerages that restricted trading of certain securities yesterday. So you do see some movement there, but let's be honest. Do I really think much will come of it? Maybe a fine. I don't think anybody's going to do any jail time. And I definitely don't think us as a collective of people who are investing in these stocks will be able to recoup our losses. They're going to expect us to take that on the chin, which is kind of sad. But, the story keeps going, the band marches on. And now we're into, like you said today, it's very impressive how we're able to, keep the party going. Just a side tip, I found a Reddit user found a loophole actually, how to buy these limited stocks above the limit. And this is how you do it. So what you do is you will go to that stock, the options, you will go to the February 5th option, and you'll go all the way down to the cheapest price option on the list. You will buy that option, and then you will turn around and immediately exercise it, which would turn that option into 800 shares. Slightly more doing it, but if that's what you were looking for, if you really want to get over 100 plus shares, that would be the way to do it. If you wanted 100 shares, you would buy one. If you want 200 shares, you would buy two. And let's say you wanted 150, well, you will buy two and turn around and sell 50, and to get to your desired 150, right? But that is a very creative way to get around it. I wish I had known about that earlier. I might have done a few more moves, but that's the power, right? That's the power of the community that's been created. It's not just Wall Street bets. It's with your friends. It's with your family. We have a group chat with a bunch of college friends and people we know growing up, and we're talking about stocks left and right. What's going on? Who's doing what? Sending each other articles. This thing has galvanized beyond Reddit. I don't think these big hedge funds and Wall Street fat cats understand that they really inspired a movement. They really gave credence to the retail investor as a horde of people, not moving. We're not moving separately. We're not moving like chickens with their head cut off. We're exchanging information. We're taking risk. And we're listening and exchanging information with each other to make these moves. And I think they still don't respect us. If you turn on and you look at any of the big, the talking heads on any of the financial channels, they you think we're dummies. They don't think we know what we're doing. They think all of us live in our mother's basements and we just got a little bit of stimmy money and we decided to go invest it. They are really doubting the sophistication of all these individual investors and all what we're bringing to the table. Even if you're someone who doesn't know and it couldn't tell you what an option was and couldn't tell you what a PE ratio was and don't know about earnings and things like that, but they listen and they're able to discern who are the people who do know, and they're spreading that knowledge and teaching others, and it's spreading like wildfire, right? And that's the power of this movement, because it really is a movement. How far does this movement go? I don't know. That's the question everybody wants to know. How far can we take this train? Well, I'll tell you what, Troy, as we both had talked about a little bit earlier before we got on, they are still buying these shorts for GameStop. They're still buying these shorts for AMC. They're still buying shorts for Express and Bed Bath & Beyond and all this stuff. Like you said, they're addicted. They can't help themselves. They think they're so smart. They think there's no way that this thing can keep on going. They keep doubling down. And you know what? So at one point, do you say, who's the idiot here? Right? You're losing, and you keep doing the same thing that's losing money, right? It's they call that insanity, doing the same thing, expecting different results. I, I can't believe that we're saying that they're the people who are supposed to be the smartest people in the room. What it really looks like is they're the people who had the means and the resources necessary to take advantage of certain things that nobody else has. But doesn't mean they're the smartest people in the room, right? So we'll see how this story plays out. At this point, I think it's really an international movement. That's why you saw AMC and GME all bump after hours overnight. It's because we got help from our friends overseas in the Asian markets and the European markets coming in, making sure that the volume, the purchasing of these stocks did not fall, that they were continuing to buy over there, which kept the price afloat and gave us a strong start to the trading day. It's going to be interesting to see what next week's going to bring. I think next week will be real telling. Now that this is out in the mainstream, now that all eyes are on it, how will things play out? At this point, Wall Street best believe those hedge funds are going to be working 24/7 over the weekend, trying to figure out a way to make sure they stack the deck in their favor. Whether it's going to be through another restriction of buying, whether it's going to be trying to get some regulations put in to stop the average investor. They're going to try to find something. They're continuing to flood it on TV and flood it and act like, what they try. I read an article that said the entire market is down because of what's going on with GameStop and AMC and all these other companies. I was like, you're going to take 20 companies versus over 2,000 and say that just because people are speculative on these 20 companies, the entire market must suffer. I think that's further market manipulation. I think they're doing that on purpose. I think that the reason the stock market took a big hit overall today is so they can run to the SEC and run to Congress and say, see, look, we told you what they're doing is killing the market, right? You need to pass some regulations against them. Because there's no reason. What does GameStop have to do with Amazon? What does it have to do with Google? What does GameStop have to do with Tesla, right? It doesn't change the fundamentals of any of those companies. It doesn't change their bottom lines. It doesn't change their strategy, the investment strategy we use with them. The only thing that's changed is that these big hedge funds are losing a ton of money, and they're trying to play dirty in order to get it back. And I think we're going to see some telling stuff next week. I'm holding, I got diamond hands. Matter of fact, they might be carbon fiber at this point. They're carbon fiber at this point because they're getting a little cool. I'm getting little designs on them and whatnot. But I'm not ready to back down. How about you?
I'm not at all. So one of the biggest people who I see on the side of the hedges at the moment, Massachusetts Secretary of Commonwealth William Gavin. He's on CNBC. He's out here running around talking about how GameStop trading frenzy represents a risk to the U.S. market. And I quote, "The marketplace should be a place where risk is taken, but not reckless risk." Interesting. You should tell the hedge funds that. You need to go and tell the big investment banks. The only impact that'll have on a greater market is the fact that some of these large investment firms are eating it so much on short sales that they have to sell off some of their other stock, since they've literally lost $20 billion in 1 month and then they're still shorting the darn stock. They're holding fast on their end, shorting the stock while losing billions because they're able to get lifelines, they're able to get bailed out, and they're able to borrow money at a near zero interest rate. So the reality is the risk is to the institutional investors. They must be careful with what they do and its impact on the market, because they're the one moving millions and billions of dollars with millions of shares throughout the market. They can trigger sell-offs that cause the market to dip. And by putting out this doom and gloom simply because they got beat over here, you're right. I agree. That's market manipulation. Those things need to be discussed. The reality is regular people discussing this openly, very transparently. I'm actually quite impressed by Mark Cuban's come to the defense. Mr. Wonderful Kevin O'Leary, both from Shark Tank, has come to the defense of this. And it's really a new era. And this isn't going to change. They're not going to be able to stifle free speech on forums or websites. like Reddit. They're not going to be able to control whenever somebody wants to decide to play the other side of an overly shorted stock. Every time a stock reaches a high short position, you're now going to see this type of hype and excitement to drive up its price, and that's not going to end anytime soon. This is the new way, and they're going to have to get used to it. If anything, they want to put downward pressure on the market. It's going to take too long to get legislation passed, but what they're going to try to do is encourage the SEC to step in and suspend trading of the stocks, which a few of them have been calling for. They're looking for 10-day halts to have a chilling effect on the price. They have launched what I would call an all-out assault that appears to be semi-coordinated, either that or it's quite coincidental. You have all of these chilling effects on the prices of these stocks, yet most of them are still up. People are holding. The people are banding together. And if you were to take a peek at the Wall Street Bets Reddit or anything like that, they allude to alleged always, people from buying shares from all over the world and getting involved in more of the movement aspect of this. If you wish to get involved with the movement, there's people out there who claim they don't care about the money. That's one thing. Most people care about their coins. I don't know about you, but I darn sure do. So you definitely want to be smart with it. But this idea of patronizing the quote-unquote retail investor, and keep in mind, I'm going to say it a million times, whenever you hear retail investor, they're talking about the average Joe. They're talking about you. They're talking about me. They're talking about you listening out there. And they're talking about how unsophisticated they are, as if we're the ones who's lost $20 billion in a month. They're getting fried. They're getting worked. It's becoming more and more difficult for their analysts and these large firms to predict movement of prices and gauge their risk. Now, if they wish to make the argument that large institutional banks need to have that ability to do it effectively for the economy, hell, be honest and open about it. Speaking of being honest and open about it, I think Robinhood would have done a lot better. Shift a quick gear there. They'd have done a lot better to tell people we don't have the cash to facilitate this. It might have caused people to freak out, but I really wish we get away from this era of corporate PR where they're blowing smoke in your face or saying nothing and just eating the PR hit instead of being open and honest. And I got to wait 24 to 48 hours after people have lost money and lost out on the opportunities to trade to get your CEO out there explaining away himself. But the reality is the information is out there. The research is out there, whether you're using Robinhood or any of these apps. They're all providing excellent research, excellent data. People are forming the actual thesis behind why they're pushing this investment. You can find it on the Reddit. You can find it on YouTube. There are people who pointed out these overly shorted stocks and the impact of mass buying up and holding of the prices. Because the most impressive thing, you want to talk about, the unsophisticated buyer. You would have to get in here and take a look at GameStop and take a look at the growth over time. There are people who bought this stock and made 100, 200% returns, and they did not let up. People bought this stock as far back as October, in which this price was around $10, $12. And when it started to climb in January to $39, $40, they did not give up. People continued to hold. In fact, many people continued to buy. And then the price shot up to the $60, $70 range, and people continued to hold, and they continued to buy. I'm sure some got out, but I think you understand where I'm going for here. GameStop hits $100. People didn't just jump off the ship. 150, 200, and his peak $347. The people did not jump ship, even surviving the dip day to day, the 27th to the 28th, from $347 down to $193. People didn't jump ship, and the buying pressure is still pushing it upward despite the restrictions on various brokerages. Where here we are sitting at $320. It's up overall 2,596.89%. That's astronomical. And to sit here and say the people that have engaged in this made tens of thousands, and in some rare cases millions of dollars on this, are unsophisticated and need to be protected from themselves is a naked and bald lie. It's true politician doublespeak. People are more sophisticated than ever before when it comes to the market. More people are getting involved in the market. These are the very people that large brokerages wouldn't touch because they only had a few $100s. But they're taking that few $100 and they bought hundreds of shares of $10 at GameStop, and they're doing great right now while your large institutional bank needs to be bailed out.
When I talked about earlier about this being movement, I just came to my attention. Someone texted me just now that Coin Market Cap, and for those who don't trade crypto, Coin Market Cap is a website where you can see the prices of pretty much almost every cryptocurrency there is out there, and it'll list the prices, it'll rank them based on market cap size. What Coin Market Cap just did is they put Wall Street Bets as the top crypto coin, sitting above Bitcoin. That shows you the power of the movement that's been created. That shows you that all eyes are really on what's going on. This showdown between David and Goliath. Us small-time investors compared to these billion-dollar hedge funds. This is prime time. It's almost prime time television. I'll tell you what. Last night
Did they actually create a coin, or is that
It's not a created coin. What they did was they just put it up there as a show of support.
Okay. Double checking to make sure.
No. If they already have a meme coin. It's called Dogecoin, and for some reason that's pumping. I think Elon has a lot to do with that too. Whatever Elon Musk tweets, whatever that is, it does well. It goes up in price. The man has golden fingers.
And that's an interesting question when you're talking about the idea of market manipulation and who can and what. We know Elon Musk has drawn ire and gotten in trouble for talking about his own company in the past, but now he can post a meme and cause a stock or a coin to explode. He doesn't even have to say it. He can just literally post, he posted the picture of the dog, and everybody knows what we're talking about here. Or he can add Bitcoin into his, bio or what have you. And
he put Bitcoin in his bio. I mean, he's a smart, savvy investor himself. Of course, he's a great businessman and entrepreneur. And I think what everybody has seen is what happened yesterday with Robinhood validated the need for cryptocurrency. It validated the need for centralized currency that nobody can manipulate. Crypto is peer-to-peer. I want to trade a coin for something. I can just go to that person. What's your wallet address? And you send me this or that, right? You have exchanges to help, but I can send crypto anywhere. I don't need somebody's permission. I don't need someone to tell me that I can or cannot. That's the power of cryptocurrency. And it has a ton of utilization. All these different coins, these DeFi coins, which I know a lot of people are up on, and a lot of people have no idea what I'm talking about. But the utilization of all these DeFi coins that are coming up is quite amazing. It's almost like the Wild Wild West. A lot of these coins, some of them are scam coins. Some of them get ideas but never take off. But some of them have solid communities behind them, the valid use case. And, I think there will be a DeFi bubble. I think that bubble will pop. But after that, you'll have some remaining coins that are legit players and have a legit future. And, in the world coming forward as the broader adoption of cryptocurrency happens. And, it's interesting times, but what happened with Robinhood pretty much solidified why you need cryptocurrency. And for me personally, I had Bitcoin and Ether on Robinhood, and after yesterday, I took it off. Unfortunately, with Robinhood, you don't have a physical wallet, right? Or a digital wallet. You can't send your coins from one place to the other. Because of that, the only way to get your crypto out of there is literally just to cash it out. And then exchange it. I took it over, my money over to Coinbase and bought back in, right? It sucks because I think I took it out around 33 Bitcoins at 33,000. And when by the time I woke up in the morning, the funds had moved over to my bank account and I had moved them over to Coinbase Bitcoin. It jumped up to 37. That sucked. But, today I'm happy that I can control where my coin goes. I have an actual wallet. I can move it to where I want to. If I want to take it off in cold storage, I can. But I I think I would advise, look at your tax implications. I'm going to take a tax hit on that. That's gonna count for next year's taxes. That's okay. I'm slowly divesting myself from Robinhood personally. I love their UI. I love the ease of use of the application. I love that it in some ways it helps teach you along and helps your new investor kind of walk through the baby steps of learning how to invest, learning what some of these terms are, complicated terms are. It does a really good job at that. I'm not going to deny it's a fantastic app. It looks beautiful design. You go to see some of these other approaches, they're not that intuitive, right? You have to know exactly what you're doing. At this point, I know that. I know exactly what I'm doing. So that's fine. Some of these other brokers have way more resources. But, I love Robinhood for what it was. I loved it when it came out, just having the ability to trade right there on the spot. I love the fact that they essentially funded you the money even before it cleared, right? So if you deposit money, they will get you.
That's part of what got them in trouble this week.
But I liked it, right? I liked all the things you did because it made it seem like they were for the individual trader. So to have them with this kind of level of betrayal that stings a lot. I used to always tell everybody, like, oh, you get invested, just download Robinhood. I can't say that anymore. Right now I'm moving my stuff. I'm considering heavily moving it to Fidelity. I think, it's sad. It's sad. I didn't want to leave. I still don't want to leave. Part of me doesn't want to leave because I like the trading platform. But, it's like a bad relationship. You don't want to leave, but you got to go. So, that's the unfortunate, way things stand. Like I said, that interview with the CEO last night left a sour taste in my mouth. You could tell he was lying out his teeth. It's just not good. As an investor, as a customer, I want to feel, I want to feel like I'm taken seriously. I want to feel like, you want to respect me and that you're going to be honest, straight up with me. I don't feel that anymore about Robinhood. I feel like their promise of what they were going to be, maybe it started off that way, but somewhere along the lines they got lost. They got lost in the way of becoming a huge trading brokerage that has millions of users, and they kind of lost their way up top. And this could be a symptom of that. But yeah, I mean, it's time for me to move on. It's going to take a while. I got a lot of options. I trade a lot of options. Mostly sell calls, so I got some market calls that need to expire in February before I'm ready to make the move. But I've started the process. What about you?
So I slept on it. I definitely was furious. I definitely was ready to leave them. I really am torn because the reality is this fact that this is happening this week at all very much would not be possible without Robinhood, in my opinion. Robinhood is the sole and primary responsible party for us having commission-free trades, for the ease of access to the market, the ease of access of options, and for those who know what they're doing, the ease of access of margin at low rates. So they have a lot of benefits to them in doing that. The hard part has been what we saw this week. If it was no explanation and it was purely, what sounded like total BS, then I probably would be totally off the ship. One of the explanations was talking about the clearinghouse. So here we go. Let's get back into that. So it wasn't a choice. They were talking about how all stocks have to be held for 2 days in the clearinghouse, and the collateral of the 2-day holding period became extremely expensive because of the volatility of the stocks involved and floating as much volume on those stocks as Robinhood was. It's clear that when Robinhood was restricted yesterday, it pushed that volume down. I believe the overwhelming majority of people buying those shares are in Robinhood. So, and they're in Robinhood because of the ease of access. Much to have been due about Robinhood's design. They make it seem like it encourages people to invest. And forgive me, I can't remember the exact credit, but I watched somebody on an interview this morning, and they're like, "Yeah, sure thing. The confetti. I wasn't going to buy $100,000 of a penny stock, But the confetti falling really sold me. No, those people are going to buy what they wanted to buy either ways. But the average Joe has been able to get into investing, and now we see the rise of Webull and these other competitors. They're offering free stocks and things of that nature. To me, that is all pioneered by Robinhood, so I give them credit for that. I give them their, pun intended, feather in their cap. I don't like the way they handled this. They're definitely eating the PR damage. I'm going to give them a chance, but it's going to be their last one. I don't want to see any more nonsense. I think the scrutiny of both, I'm sure, their Wall Street peers and of the politicians who are calling for investigation, what have you, made sure that they're really tight when it comes to having their collateral on the back end of facilities trades at that volume. And they've just been fined just a few months ago. I think it was 22 million by the SEC, and they're kind of on thin ice with them. So I think they didn't want to push it. I wish they came out and said that immediately instead of just canceling an entire day of trading with minimal notice. The minimal notice was also the worst part for us. So because they are the pioneer of creating this revolution and making it possible that people can get in and more people have access to the market than ever before. We make fun of them, and they deserve it. They deserve to get, from a PR standpoint, stomp them out, meme them to death, the whole 9 yards. They're going to have to eat it. They're going to have to eat shit on this, period. There's no other way to get around it. But I'm going to hang in there. I have definitely prepared myself. See, the key is catching people off guard and moving your money between institutions. So I will definitely have a backup on hand if I need to, buy a allegedly volatile stock. But I'm going to hang with them for a little bit. I really do enjoy the margin. I enjoy the access of the spending card combined with the low margin rates and the fact that they're the pioneer on it. So I'm going to rock with them just a little bit longer, but head up and eyes open, my eyebrows are raised, and they're definitely on thin ice with me.
Yeah, like I said, it's hard. I mean, they were my preferred platform, but I don't know if I can look past this transgression. Not unless I see some goodwill from the CEO moving forward. Like I have until February until a lot of my options expire. I don't want to move those over in case I need to do something and get caught with my pants down. And then move my stocks into a position where they're more of my stable long-term investments left just to move over. But yeah, right now I'm not Robinhood. I'm not riding high on it. There's still restricting trades. We'll see what happens on Monday. Like I said, maybe they can get their ducks in a row over the weekend and figure out what they want to do going forward. But left a bad taste in my mouth. Still a little pissed off.
Definitely understandable. And as one of our commenters said, definitely came across as Super Sadie. We had a lot of conveniences happen this week, from the suspensions of, there was a Robinhood Stocks, not related to Wall Street Bets, just Robinhood Stocks group on Facebook removed. I think from the words of the moderators, take it with a grain of salt, but they said it was removed for sexual reasons, which just blew my mind. We had the Discord for Wall Street Bets get removed. Wall Street Bets was under assault, and then they had to go private, and it came back public. A lot of coincidences the moment that they wreak havoc in the market, in my opinion, legally, openly, and transparently.
2 million users, 2 million people.
Which has ballooned to nearly 5 million, by the way.
Oh, it's jumped to 25. Wow. So how
To
you
5 million.
Oh, 5 million.
Yeah.
So how are you going to moderate 5 million users constantly posting, putting up memes? It's going to be just a law of averages. There's going to be a few assholes in there. Probably a lot there, but the vast majority of people are in there for the right reasons. Like I said, this is just a smokescreen and an effort to try to get this to go away, right? But community, like I said, the more they try to get rid of the community, the more they galvanize it, the more the community comes together. And I'm loving it. I love seeing this underdog story. I think when you look at most rational people, that are people you would consider, people with good heads on their shoulders, just in general in life, they all seem to be rooting and pulling for this underdog story to happen. I like it. I really do. I really like it. Like I said, I know it has to end. I know this train will end at some point, but I hope it ends in a way that the retail investor, if you will come out on top. It's I'm really rooting for that to happen. So let's talk about a little bit about strategy. So for disclosure, like I said, I own AMC and I own some GME. I'm just going to hold on to that GME for the long term just to see what happens, right? I have no plans of selling that anytime soon. Of course, I keep an eye on market conditions, but right now I'm ready to ride that lightning until the finish line. But AMC, I do have about 300 shares that I own. I have about 5 contracts. I bought 5 calls on it. And what my strategy is I have no idea what the future of AMC holds. I have no idea how much runway is left. I do think there is a little bit of runway left. It could be a lot of bit of runway left. I don't know, right? But my strategy is this. On the way up by owning these 300 shares, I want to be able to make money whether the stock does nothing, whether it goes down, whether it goes up. And the tried and true way to do that is to sell calls against the shares you own. Right now, I have 3 calls. There's 3 different strike prices, all expiring next Friday for my 300 shares of AMC. So we'll see. I was able to collect a pretty good premium, pretty juicy premium. So for those 3 shares, for those 300 shares, I was able to sell 3 contracts and net a little bit over $1,600 that expire next Friday. So to me, that's still in money because the volatility is so high. So I get to hold on to my shares. If it truly goes parabolic, then yeah, maybe I miss on the extreme gains, but I'll at least 3x my money, at least at the bare minimum, if it goes parabolic. And I still have those other option contracts that I bought calls on. And that's why I bought those calls, knowing that I was going to sell calls when I got the 300 shares. I bought calls just in case this thing really took off to the moon. It's possible. I don't think it'll ever go as high as GME because I believe the last time I checked, now these numbers could have changed, AMC was 60% shorted. GameStop was shorted 130%. Right, so it can't go as parabolic as GameStop did, but it could still make a nice run up. Could it make it to 100? I don't know. I'm thinking of more. Let's see, we can get it over 30. Maybe 40 or 50. I think even that's a bit of a stretch, but more realistic. But we'll see. It all really depends on what the average investor does. Can they hold? Can they, not ignore all the FUD, right? And just sit tight. And whether the price goes a little bit up, a little bit down, they don't panic sell. They stay in there. They stay firm. And when these contracts expire and the bill comes due for these short sellers, they'll have to go and start buying shares to cut their losses. Then we'll see that big run up. Really big run up has yet to happen with AMC. I think the run up we've seen is just people buying in, noticing that it's shorted, right? I don't think the big run up, the squeeze, if you will, the squeeze has not happened with AMC. I don't think that's happened yet. I just don't think the squeeze will be as big as GameStop, but I still think there's plenty of money to be made. So, like I said, I'm holding on. I'm staying firm. I have my strategy in place. What's your strategy, Troy, for trading AME?
So for me, I'm just holding at the moment. I got the diamond hands. I definitely want to see what things look like on Monday, and I'm going to watch throughout the Monday trading day. I'm definitely unlikely going to take an action on Monday. The key will be what it closes at, what the swings look like as contracts expire or have expired now today. So I'm definitely going to be looking at Monday. I have no options on them. I'm just holding a few hundred shares and seeing where that takes me. I didn't play the option game with these, being honest, because I felt like it kind of came later in the game on them. I feel like that was ripe for early in the game for him. Just for me and my knowledge of options trading, I am not an options master. I defer to you in that one there, sir. But you mentioned the shorts. So Market Watch has an article that has just been updated about 40 minutes ago talking about the short squeeze list. GameStop is still showing 120% short. That's amazing. So like, they only shaved off about 20%, so they're not letting up on that. But it's a quick drop off with everyone else. AMC's 28% short, so not nearly as bad. Bed Bath & Beyond's at 63%. That catches my eye. National Beverage Corp, which is Fizz, is at 63%. You know what? Let me see if I can get this window up here. Why not? Let's see here. We'll capture that window. Where are you? There it is. And well, don't cover me up. So at least people can see along with us there. There we go. That's a little better. But so we definitely have the GameStop 120% short. AMC, which is the second most popular one there, it's only showing at 28% short. And this is an article, if we go to the top, was first published yesterday morning, and last updated is showing today, 4:41 Eastern time, so that's almost about 40 minutes exactly ago. But this is according to Market Watch here. Biggest shorts are showing Bed Bath & Beyond. That's one of those names, by the way, on the side. Now I swear I never get right. I want to say Bed Bath & Body Works. I always merge those two things together. But Bed Bath & Beyond, BBBY. The rest, I see only two others of 50. I have no idea what these two companies here. I definitely don't recommend people to go short hunting when they're deciding when to invest on. So this was a combination here of shorts. I don't understand what happened to Nokia. Somebody asked about we have somebody who they kind of had a comment hop in there, but what happened to Nokia? I didn't see what happened to the price, so we'll take a peek at that later. But I definitely don't recommend people just grabbing things for the shorts. This was a combination of people openly discussing and sharing their ideas for the shorts. Clearly, GameStop, as you can see, way over shorted, well over 100% short, and that means we're greater than the outstanding shares. So that explains a lot of why GameStop, despite being at a high value, has maintained its price. The rest appear, from the naked eye, to be reasonable shorts. It's just that AMC got super popular. It's not nearly shorted as much as these other ones. So
it was shorted more, so they must have.
These definitely got updated.
So that shows you that yesterday, when they
limited it and the AMC plummeted, a lot of people closed those short positions. I'm sure
they surely did. And here's the thing about AMC: it's AMC theaters. For those who are not in America, AMC theaters is a movie theater where you can see the cinema, you can watch different movies as they come out. They're a chain. They have locations. I know at least across the United States. I'm assuming they have locations across the world as well. But AMC was in trouble. They were in big trouble, just like a lot of businesses after the pandemic. I mean, you could not go to the movies. I mean, what is a movie theater company going to do when people can't go to the movies? They're going to suffer. They're going to lose a lot of money, that's what happened. So that AMC was actually able to raise over $900 million in capital earlier this month, which in itself is a good sign for the stock, right? Beyond the short squeeze. But then when people found out it was being heavily shorted as well, that's what really caused people to rush in. And that's why I think the initial spike in the stock price came from. Now that we're seeing that they were able to manipulate the market yesterday by not allowing people to purchase the shares, only sell them, now we see that they were able, these hedge funds were able to close some of their short positions, which is really sad. So what's that going to do? Like I said, it's going to limit the amount of squeeze that can happen in AMC. I still think it could possibly you can still double your money, maybe even triple it. I don't think I doubt it goes parabolic. The only way it does is these short sellers see that the price of the stock is still rising, right? And then they come in and they double down on the shorter positions, saying that there's no way it's going to keep keep rising. And that could happen because as we see these hedge funds, they love betting against Wall Street bets. They love betting against the people. So that could definitely happen. That could definitely happen. Another thing to keep in mind, I read an article today that announced that the AMC CEO was looking at possibly doing another capital raise so doing a capital raise, for those who don't know, is diluting the share amount by adding additional shares to the company. So you dilute the share amount, and by adding those shares and selling them, you raise capital, and that's good for their bottom line. They need the capital raise. They need the money, right? They need that cash. But it is bad for shareholders. Why is it bad? Because one thing, it dilutes your stock. So but the one stock you owned is now worth a little less. But more than that, it's not going to be worth that much less. The bigger thing beyond that is that the psychology behind it. I'm a big investor in NIO, it's a Chinese car automaker, EV automaker. And every time I notice that they do any kind of capital raise, the price of the stock goes down. And you would think that for a starting up EV company, raising capital so they can further develop the business, they can create factories, and they can expand and bring in and help do R&D on new technologies and do battery as a service, things like that. You would think with that investors would be excited and would want to buy more. But the inverse happens. I mean, it's just something. It's not specific to any particular stock. But when people see capital raise, they get paper hands and they start FOMOing and they start selling their shares. And it makes no sense to me. I see a capital raise as a strong. If your company's able to do a capital raise and you can see what they're going to use that capital for, then it's a good thing. I saw why me was using capital for to expand their business. I see why AMC is doing a capital raise for because even though we have these vaccines, it's going to be a little while, probably until the summertime, until we have enough people. I think it's 85% of the population vaccinated enough that you would consider that the pandemic, would be over to an extent, right? Because then we'd be able to reach a level of herd immunity. But that's going to take till the summertime. We're in January. So you would think AMC raising capital would be a good thing. I think it's a good thing for the company in general. But in the short term, and they're taking advantage of these soaring stock prices. But in the short term, that's going to cause some people to panic, cause some people to get paper mache hands, and they're going to drop out. So that's one thing. He announced that he was looking into it. They haven't officially announced that they were doing capital raise with that. He was exploring that option. I imagine that if that does happen, we'll see that sometime next week. So it's going to, like I said, AMC is going to be interesting. It's going to be interesting next week for AMC.
I'm excited about it. I'm
excited about it. I'm still holding on. Yeah, I'm still holding on. But the granddaddy of them all is GME. GameStop is going to really.
And if you can see the article I have there, you can see exactly why that is. GameStop short sellers, according to the CNBC article, which came out 1:39 Eastern Time. It was updated, came out around noonish Eastern Time. They are still not surrendering despite the $20 billion in losses. So it's two different sides collaborating the fact that this stock is still shorted by 120%. So the share price is too high for me to be interested in diving in this late in the game. But for those people, as they say over on Wall Street Bets with the diamond hands, it's going to be an interesting week. It's going to be an interesting tug of war. We know that we've had restrictions, and we know that that's going to have a chilling effect on the price. At some point, I can't imagine to keep these restrictions running. I feel as though they want to have this stock frozen so those hedges can benefit by continuously shorting the stock. If the stock is frozen, they won't be able to move on it either ways. But I believe they expect a huge dip whenever it begins trading again, because people are going to be scared away at that point. That's the only logical reason I can see why we're still short at 120% after seeing what happened this week.
Yeah, I think so. It's going to be a really exciting, I think, Monday in terms of news, just from what the brokers brokerages do to what the movement on the stock price is. And I think over the weekend, we'll actually see a good run up in Bitcoin. I think people are going to flood there. Just frustrated with some of these brokerages to say, hey, I need to throw some money in crypto. Not just Elon Musk added the Bitcoin item to his Twitter handle. Also, the CEO of Twitter did it as well. So you're starting to see broader and broader Bitcoin adoption. Don't be fooled. Hedge funds and these big institutions are buying up Bitcoin quietly over the past year, not trying to make a big noise about it because they don't want you to rush in. That's a fact. If you even look, that article came out that I think Princeton and Harvard universities there, they have been buying a lot of Bitcoin for their endowment, right? And that tells you that these Ivy League schools think that this is a good investment and this is going to help field and fund their universities, right? And they have been and they're currently still buying. Yeah, it's the reason you see all these big institutions now pulling up and establishing cryptocurrency divisions. It's the reason you see that you can buy Bitcoin on Cash App. And soon, I'm pretty sure Square will find a way. Square is the company that owns Cash App, and they also are a company that do a lot of the peer-to-peer payments for small businesses. I guarantee they're working on a way to incorporate Bitcoin into their payment structure. So you're going to see some things start to change. So I would imagine that. So have you ever been curious about Bitcoin or any other cryptocurrency? Now would be the time, I think, to try to get on the train. Just because you see the coin, I think, what's it sitting at 35,000 right now, Bitcoin. That could be cheap. That could be cheap. You know, you got Kathy Woods, who's a brilliant investor in her own right. She's already called Bitcoin going to $500,000 a coin. So right now, $35,000 a coin seems cheap, right? You have other people calling for Bitcoin to be at $1 million a coin, right, in a few years. You have people calling for Bitcoin to get to $100,000 a coin by this year. You have people calling Ethereum. What people don't know, Ethereum is like the backbone to a lot of these DeFi applications. So a lot of these coins you'll see when you start going down the crypto coin rabbit hole are built on Ethereum's platform. They need Ethereum. People call it Ethereum or ETH or Ether. They're all the same thing. They need Ethereum to power their application, right? It's built on that platform. In order to even get these DeFi app coins, you need to trade Ethereum, right? So people say that Bitcoin is gold or crypto and Ethereum is the oil. You know, Bitcoin is the gold standard, the granddaddy. It's the unit in which everything is measured. And then you have Ethereum as the oil. And the reason called the oil is because it powers a lot of these other coins. Without Ethereum, these coins would go away. And people see Ethereum getting up to $20,000 a coin, possibly by the end of the year. Who knows? I mean, crypto's volatile. Crypto's just as volatile as what we're doing, what we're seeing with GameStop and what we're seeing with AMC and what we're seeing with Nokia and Bed Bath & Beyond. It's very volatile. So that's why you can't have paper hands. You can't have paper mache hands. You need to have strong, diamond hands.
Can't have them cotton candy hands. We don't do cotton candy hands around here, man.
Yeah, you gotta have carbon fiber hands. You gotta have some
and that's actually just a side note. If you're gonna invest in something, and you have to be very careful and understand what your own goals are. Some people are looking for the quick flip. Can't knock it. But if you're putting money into something and you freak out because you see a subtle dip, believe in what you're putting your money in. I recommend that for everyone and all. Believe in what you're putting your money in. It's one thing to try to catch a wave, momentum. A lot of GameStop and AMC this week was momentum and wave, and people don't want to miss out on the next GameStop. But especially when it comes to the cryptocurrencies and what have you, look at Bitcoin. There was a point, what was that, about 2 years ago, where Bitcoin, it hit its high at the time of $20,000.
Yeah.
And then it fell all the way down. I think it touched $4,000. And now here we are. It hit $40,000. it went down to about $30,000. Here it is back at $34,000. So you have to be very search yourself. Know what you want your goal to be when you invest, whether it's a cryptocurrency or any security. And it's now it's going. I think it's going to join the lexicon. Diamond hands. Have the fortitude to weather the storm, and especially if you're not losing money. If you're taking profits, even if it's $1, that's one thing. But don't be scared and jump out. Imagine if all the GameStop people who jumped out, I'm sure some did when they saw those shares drop to 200 and they dropped to the 100, and here it is right back up in the threes. So some people took a bath just on that, and it was a bath of their profits. A win's a win, but have the diamond hands, man. We don't do cotton candy, paper mache hands. Weak.
Yeah, I mean, you got to understand. The one thing we want to be perfectly clear: do not invest money that you're not willing to lose. I can't, and neither Troy or I, we got to say the same disclosure you hear everybody else say. We're not financial advisors.
We are not financial.
Can't tell you what to do with your money. We're not professionals. We're average Joes. Troy is air traffic controller. I'm an engineer. We have day jobs, but what we do is we do not invest more money than we own. We do not do that because you don't know what's going to happen with any investment. I mean, whether it's real estate, whether it's going to be crypto, whether it's going to be in the stock market, whether you think you're going in on somebody with a business. You have no idea what can happen with that investment. You can make a ton of money, you can lose it all, right? But you have to be willing to only invest money that you are willing to lose. A lot of people get into really bad shape thinking that I take my rent money and I buy, AMC or GME or whatever, and I can flip that and make even more money. I'm gonna do that. And they go ahead and do that. And as soon as the price falls, they panic. They panic, and then they end up selling low because they say, I have to save what I can. You can't do that. You can't look at investments like that. It's good to be a smart investor. You got to know when you want your exit strategy is going to be every time you enter any kind of position. But you got to be not invest with your heart. It's okay to get happy, excited. It's okay to get that. But you have to not just you have to use your brain. You have to say, what your risk tolerance level is and know enough about what you're going to put your money into. If you're going to put your money into something as volatile as GameStop, you have to know that thing could drop back down to sub 100, or it could go to $1,000. Either way, you got to be able to live with those consequences. That's why you never invest money that you wouldn't lose. If I lost all the money I had in AMC, I would be upset. But at the end of the day, it wouldn't break me. It'd be a loss. It'd be a tax loss. I can write off against taxes. But I would keep investing. I would keep moving forward. This wouldn't break me. And that's another thing I want to say. Don't be mad and upset if you don't make money. Don't be mad and upset at investing if you lose money. Don't be mad and upset at investing if you don't make as much money as you thought you would, right? For a lot of people, this is their first time dipping their toe into the market. It's going to be a learning curve. Everybody gets their hand burnt at one point or the other. I've done things where I've made a ton of money, over 2-3x my investment, and I've had things that I've lost my ass in. And that's part of investing. It's a learning thing. You end up developing your strategies. You'll go into things like this in the black, or you'll go to other places and you'll start absorbing information left and right. You eat the meat, stuff the bone, and figure out what exactly does your investing strategy going to be. What is your investment strategy going to be? What are you comfortable with? What option makes the most sense to you? Right? So you got to keep doing your research. You got to keep reading around. I mean, the more informed you are, the more things you read. I mean, for me, when I wake up in the morning, the first thing I do is look at the financial news. That didn't used to be like that 2 years ago, but now it's the case because I actually like this. That's why we're here talking about it, because we like it. I mean, it's interesting to us. That's something we like to do. I mean, we really love to be one day get our investments to the point, Joy, where we could just, retire from our day jobs and do this full time. Because I love I love talking about investments, not just stock, but real estate. Anything that makes somebody some money, I like talking about it. It's interesting to me. So you got to develop that passion, man. You got to figure out what it is. And it may not be stocks for you. It may not be. It might be real estate. You might be a real estate guru. You might be able to look at a house and say, hey, I can flip that. If I do this, and that, I know I can sell this for a profit. Or I can rent this out. Maybe I could do this and I can split it up and I can section it off, or I can rent out the basement and live upstairs, and I can do whatever. Everybody has a investment eye that they have for something, right? You just got to figure out what yours is, and then you got to follow that passion. So you just got to be, when you're going into these stocks, long story short, don't use money that you don't have. Do your research. Please do your research. That will help you, greatly help you and aid you in not losing money. And you got to help start and develop strategies to make yourself a savvy investor.
Wins and losses are not locked into you actually sell the asset. So you sell the security. I pulled up this Tesla stock price. This has been my favorite stock and a darling of the last year. Truly, it has been. And you can see just throughout March and February what these share prices were. And keep in mind they had a stock split, so I believe this has been adjusted. But you can see the peaks and valleys. And here we hit a nice peak, and someone bought up here on this hill on the way up to this peak. Peaks out in August at 498, and you can see it dips all the way down, and that's August the 31st, 498 is its peak. Just barely a week later, 330 hits this valley. Panicking on this way down or panicking at this bottom, you're going to lose that money. You look at where the stock price is today. Even now, we're having another valley. Peaks and valleys, ebbs and flows are going to happen in the price of a stock. And what you do not want to do is do something like take your rent money, try to turn it around, and you need to pull this money out, and you're in a valley. You're on the way down. You've lost a little bit. You can't hold it until a minimum you breaking back even, if not making a subtle profit. If you're not budgeting and only investing money that you can lose, you're going to run the risk of hitting one of these valleys in which you're going to need to get access to your money. You're going to need to get liquid, and you're going to have to make a bad trade. Selling on the way down, selling at rock bottom. You don't want that to be you. So when we talk about diamond hands, we're talking about watching in 1 week from 498 back in August of 2020 down to 330, a loss per share of roughly off the top of head with my bad math of $170-ish. Diamond Hands holds on past that because they believe in the company and going to get back through it. And you see the climb. It took so long time to get back past that peak of $498. That is not achieved until about somewhere up in November. So somebody had to watch that. The Diamond Hands holds through this. If you're using money that you have budgeted and you don't have to get access to because you've budgeted and you can afford to lose it, you can weather that storm so that you can see 50% returns on your money up in here in these peaks. And who knows where the stock goes from here. Past performance is not indicative of future results. But the key is being smart with your investment, budgeting your investment, continuing that investment. A lot of people, I know I do, I'm pretty sure you do as well, Mike, we buy those dips. I believe in a company, we buy those dips. And I dollar cost average my average cost of my shares down by buying those dips. Which is, I'm kind of annoyed, by the way, that's one of the things that Robinhood robbed me of this past week by restricting trades, but that's another one. Somebody asked, what are some key indicators that triggered y'all to pull your money on the stock's way down? It would have to take...
Cadet, you forgot to put sir before.
You would have... One of the biggest indicators for me personally, it would have to take some sort of bad news. I always try to find the reason why. It could be simply as earnings aren't as respected, or, some good news for a rival or competing company. If the news makes sense why we see a dip, then I weather that storm. If something crazy were to come out, heaven forbid, don't wish something happens to Elon Musk or something. Oh, stock price going to go down. Then that might make me want to get out. How much profit I have at the time makes me
Yeah.
decide, is this worth it for me? A lot of people, and full disclosure, I did sell shares here up in November, late November, and the stock price was in the 400s. Obviously, it's nearly doubled since then, but I sold shares up in here. I needed access to my money. I had profits. A win's a win. So, Jim Cramer of Mad Money says it a lot. You know, don't be greedy, hogs get slaughtered. You don't hang on so long that you just see the end of your profits. That's going to be an individual, personalized decision for each and every person. When you have your profits, how some people just like to get it past the year so they can get into their long-term capital gains, and some people just take the profits when they see them laying on the table for whatever reason. They might see another interest or investment that they want to get into, and they want to move money from one to the other. So that's going to be personal, depending on the stock and the budget and the situation of each individual investor. Again, we aren't professionals. We're not here to, give just our generalized advice on that one.
We're here for entertainment purposes only. But my take on the question, I categorize stocks into three categories for me: long-term buys, intermediate buys, which are, I'll say anything. Long-term is anything that I think I'm gonna hold a year or longer. Intermediate buys is something I'm gonna hold for a few months, and then short-term is, those are what I'm willing to, sell or buy at a moment's notice. It's a short-term play for me. I honestly don't, I don't want to be in that stock for the long term and try to make a quick buck. Usually those short-term plays for me are some of them are penny stocks, or some of them are really low cap stocks that I think could get a nice initial bump. Especially, for instance, I use this one for instance. I'll give you two cases. One case I was in Zoomedica. That's is a company that sells veterinary equipment, right? And they came up with a new way to do, I believe it was DNA testing on animals to show, different illnesses that they may have, right? Sounds solid to me. So I got in after the big run up, but I thought it still had some more runway to it. The price went down a little bit. Probably out a couple few $100. And I could have sat there and held it for long enough until it probably came back up, but I saw a better opportunity. So in that case, I decided to cut my losses, right? And pursue this better opportunity, right? Even though, I could have stuck there and waited around. It might have taken a month, 2 months for it to come back up. I wasn't willing to wait that long. So I saw a better opportunity and I decided to hop on it. So that's a case where I pulled my money, even though I was at a loss, is because I wanted to use that money for a better buying opportunity somewhere else. For a stock that I like, some stocks, mostly intermediate stocks that that are going to be in those months range, I'll buy and I'll hold for a while. Rocket Mortgage is one, and I was holding on to that for a couple months, few months, and to me it was just underperforming. I didn't lose my pants in it, but I just wasn't satisfied with the performance of it. I thought that it would have done better, given the fact that the Fed was handing out loans like candy. Fed was lowering the interest rates, so people were handing out loans like candy. People were still buying houses, even though it was a pandemic. Rocket Mortgage has been pretty much kind of revolutionizing how people buy mortgages, that one-stop shop all in the app. I like that. And I think over the long term, it is the top, right? But for what I was looking for as an intermediate stock, to me, it underperformed. I think I was down maybe 1% or 2%. And after a while, I said, you know what? I had my eye on other stuff, and I said, it's time to get out, right? That was the case where I decided to get out of an intermediate stock. And then for a longer term, those, I don't care about the daily fluctuation in prices. My long-term stocks are stocks that I see going to continue to grow for the next several years. And I don't care what the stock does in the short term. We can look at Tesla. I have recently just added some more shares of Tesla. I think I bought them around 880. So you look now, I'd be down around roughly $100. But I don't care. I really don't care. I don't care what Tesla does in the short term, right? Because I know in the long term, I believe it to be a $2,000 stock in the next couple of years. So I'm fine with that. I'm fine with whatever fluctuations it does in the short term. And you also got to remember that you never lose money on the stock until you sell it, right? So whatever it does at right now, it doesn't really matter to me because I have no intentions of selling it. Like Troy said, we have to take some catastrophic news, like Elon Musk had passed away, for me to actually then consider selling it. But outside of some terrible news or something like that, you got your road dogs. You ride with your dogs. You ride through hell or high water. Was it snow, wind, rain, like UPS? You want to get it. You want to get there. So that's my strategy when it comes to investing with some longer term, shorter terms, and intermediate stocks. But that was a good question. It's going to be highly individualized, and it's also going to be based on your risk tolerance, right? It's really going to be based. Everybody's going to have a different risk tolerance. I'm a little bit more risky than most, but at the same time, I've seen people that are way more riskier than me. I try to mitigate my risk.
I'm a conservative investor, so
yeah, I try to mitigate my risk through options. That's why I like buying shares in $100 increments, so I can sell calls on them. And what selling calls does is, for one thing, it reduces my price per share because if I sell a call, let's say a share is, let's say something's $10 shares, and I buy 100. That's $1,000. And let's say I sell a call against it, and the call has a premium of $10, right? So that means I'll collect that premium right away. So now my cost basis for buying those 100 shares is really 99 shares. So right away, I'm eating away at that cost to buy a stock. So I like buying stocks in bigger bulks, $100 share increments. Because not $100, 100 share increments, because it allows the ability to do that. Now, people may not be comfortable with option trading, and I totally understand that. It looks like a foreign language until I actually paid somebody to teach it to me, right? Because I read up about it, but I still wasn't comfortable enough doing trading it on mass, and I wanted to learn how to trade it for weekly income. So I paid somebody to actually teach me that.
What is the American dream?
And it's paid itself off, 100 times fold probably by now. But that's what I do. I do something called the wheel strategy, where I sell puts and I sell shares. A lot of people generally like to buy calls and buy puts. I'm on the other side of that equation. I sell it because I want the premium. When you sell a put or a share, you get that premium. And that's one thing I want, is I want that juicy premium, because guess what? That premium is guaranteed. Once I have that money is mine, and I'm not giving it back, right? So that's why I like selling puts and I like selling calls. If I want to get into a position, let's say I want to get into, I don't know, we'll say Apple, right? I'll sell a put. So Apple, what's the price of Apple? It's like around 138 or something like that. We'll say 138. I'll sell a put at 135. And what that says is, now I usually set my expirations. I always set them for a week out. I have a better ability to predict what's going to happen in a week than I do what's going to happen in 2 weeks. What's going to happen in a month. I have a better ability to predict that. So I set my expiration a week out, and I say, I want to buy Apple now, and I'd be willing to buy it at 138, but I would rather buy it at a cheaper price. So if I could. So what I'll do is I'll sell a put, which pretty much says, it's almost like an insurance contract saying that I am willing to buy 100 shares of Apple at, let's say, $135. I'm willing to buy 100 shares of Apple at $135. And for taking on that risk, you're going to pay me a premium, and that premium could be $100, right? And what happens if the price of Apple falls, right? Let's say Apple's at 138, it falls to 134 on the date of expiration, and my contract is exercised. Well, guess what? I was willing to buy Apple at 138 anyway, right? So now I get to skip out on the losses between 138 and 135, right? Now I have to buy Apple, even though the price is at $134 a share, I have to buy it at 135. That's still okay, because I was willing to buy it at 138. And I collected a premium anyway. Now what I want to do the next week is turn around and sell a call and collect a premium on that as well. And I'm going to set that call out further than I think the stock will go in that week. Because I don't want to really get exercised, but I still want to collect a premium, a decent premium. So I'll put it somewhere right above where I think it'll go for that week. And I'll keep playing this game and just stock does really well in that week and takes off, and let's say I set the call for 140 and Apple gets to 141, I can exercise, I have to sell my shares. Well, that's okay, because if I sell my shares, I still get the gain between 135 and 140, right? I still get that money. I just don't get the 141, but guess what? I collected my premium. And then the next week, I'll sell a put around maybe 130, 37, 136, depending on what I believe the stock's going to do, and I'll repeat it. That's called the wheel strategy. And no matter what happens, you're always collecting premium. You're always making money. So we see that we got Brad on the chat actually explaining a call. A call is kind of option, right? When you hear people talk about options, you got two types. You got calls and puts, to put it simply. Two things you can do with a call. You can buy or sell a call. If you're buying a call, you're pretty much saying an all options agreement deal with 100 shares. So when everybody's doing anything with an option, it's for the right to control 100 shares of that stock. Right. So a lot of people, why buying calls are attractive to some people is when you buy a call, you can control 100 shares of the stock, right, without actually paying for those hundreds of shares. So what happens is, let's say I buy a call on Apple, use Apple again. I can control 100 shares of Apple for whatever the premium is on that call. Let's say the premium is $150. For $150, I can control 100 shares of Apple. So why is that beneficial to me, right? Well, let's say I don't have enough money to actually buy 100 shares of Apples, but I still want to control it in case the price goes up, because you buy calls if you think the price is going up. That's the only time you buy a call if you think the price is going up. You now have the ability to collect money off the value of that contract with Apple going up. So what it does is it helps accelerate your gains. Right? Because now you're controlling 100 shares of Apple versus just controlling one. Like if you just say I had enough to buy one share of Apple or can I buy one Apple call. Now you're increasing the amount of money you can gain when the stock price goes up, right? So that's why calls are attractive. They're lower cost than actually buying the stock itself. And like I said, what I do with the wheel strategy, when I sell a call, I have to already have those 100 shares as collateral, right? When you sell a put, on the flip side of that, you have to have enough money. And what happens with any brokerage, let's say Robinhood, right? They'll if you sell a put, let's say you sell a put on Apple, right? I sell a put at $135, the strike price of $135. I collect my premium, but then they're going to lock up $1,350 worth of my cash. I have to have the cash or margin, but if you're just on the options, don't use margin anyway. But you lock up that cash, right? And Robinhood will take that as collateral and hold on to it until the option expires or until you sell it, right? Or for selling puts to be buying to close. But you have the collateral. So if you don't, so for people just starting off, it's more traction to buy calls and puts because they're cheaper to do. You don't need as much money to do. But once you get a little bit more established and you start getting a little bit more money, my recommendation, what I like to do, and this is my recommendation to myself because I'm not a financial advisor, I like to sell calls and puts. I think it's a better strategy. Yeah, you limit some of your upside possibly, but it's guaranteed weekly income the way I do it. And that's my strategy, right? So hope that answers the question. I know what's going on. Maybe went a little bit too deep in the weeds, but hope that kind of answers the question that was in the chat.
That'll definitely be something that maybe for our YouTube channel we can in the future investigate building a video explaining some of those things, explaining some of those option things. So I don't know if you had anything else, Mike, for us.
No, I think we're good. I mean,
it's been a wild ride of a week. Have those diamond hands for those of you guys who are there in AMC and there in GameStop. Thank you guys for watching, and as we get this live stream up and running, you'll definitely be seeing a lot more of us. Check us out on Twitter at @real_in_the_black. We are of course on YouTube. We are YouTube/in_the_black_money. Check us out. We also have our Facebook page as well. Can't miss us, and we will be back with more content soon.
All right, y'all. Thanks for watching.